Go. Thumbs up. Right, okay then, welcome everybody. Audit and Standards Committee, 14th of July, and we'll start with apologies. Can I just say up front, I'm over the moon, I'll quote. I have made an issue of this at Cabinet before, and most people have rocked up, so big thumbs up from me. Apologies. Michael?
Yeah, that said, we do have apologies from Councillor Greg Stone, and we have Councillor David Partington here today as his substitute.
Thanks. Right, declarations of interest. Does anybody around the table have any declarations of interest that they need to share in relation to today's agenda? Right, just before we move on to the minutes, I should have said this at the very start. I'm Dave Willis, I am the chair of the committee, and welcome everybody. Right, okay then, minutes. We've got 3 sets of minutes to approve. Now, I know that the minutes relate to earlier meetings, and 2 of them relate to meetings that weren't quorate. However, it would be really good if we could receive these minutes and approve them, and if members who were at the committee, if you could just nod and endorse them, that would be really helpful.
Chair, if you recall, for those returning members, even though we weren't core at previous meetings, we did agree that the minutes were correct, so that when we did meet, we could approve these minutes.
Thanks. Everybody happy to approve the minutes? Brilliant. Right, the next thing is appointment of a vice chair. Do we have anybody who wants to be nominated to be the vice chair for the committee?
Chair, I'd like to propose Brian Query. Councillor Query, vice chair.
Councillor Brian Query?
I'd like to nominate Councillor Swinburne.
And Councillor Swinburne. So we have 2 councillors nominated. At which point, if I've got this right, then we have to ask the councillors to vote on the vice chair. John, is that right?
Technically, Chair, each proposal needs to be seconded. So, Councillor Query needs to be, the proposal for Councillor Query needs to be seconded, and the proposal for Councillor Swinburne needs to be seconded as well.
I'll second Councillor Query.
Anybody else propose to second Councillor Mark Swinburne? You need somebody else?
Hi, I'll second it.
Right, okay. So we've now got 2 councillors who've been proposed and seconded, at which point we do put to a vote. Right, okay then. Show of hands, please, for Councillor Brian Query.
That's 2, Chair.
Show of hands, please, for Councillor Mark Swinburne.
1, 2, 3, 4, 5, 6, Chair.
6. Okay then. So the nominated person for the deputy for the next 12 months is Councillor Mark Swinburne. Okay. Right. Now we're going to move on to the main part of the agenda. And we're going to move on to a paper on integrated settlement that also includes a presentation. And if you will recall, I did write out to members on Friday, and I did ask you to read in particular 3 papers. This was one of those 3 papers, in order to make sure that you're up to speed with what we're going to try and elaborate on. We normally do a deep dive into one of the risks, and I asked for the deep dive to be set aside for this meeting because I think integrated settlement is probably one of the most important things we've got for this next financial year. So I think, Alan, are you doing the introductions to it? And Holly's going to take us through it?
Yes, Chair, I'll say a few words to start with and then hand over to colleagues. Firstly, welcome new members and hello returning members. Returning members will have heard some of this before, and we've previously committed to have this as a regular item at the committee because it is such an important part of our business. Just a bit about just a bit by way of background, just to keep focused on this is all about how we deliver improved outcomes for the public. Some of what we will say when we talk about funding streams and structures and processes and governance and so on, and we will do that, but the overall purpose of it is all about delivering improved outcomes for the public, and we've got to make sure that we keep our eye on that collectively. I'm just going to give a little bit of background before handing over to Holly. So, firstly, just on the purpose of devolution, is all about delivering growth, addressing regional imbalances and improving lives by enabling decisions to be taken closer to the people they affect rather than in Westminster. Since devolution began in the second half of the last decade, devolved areas have received a multitude of different grants, different funding streams from different government departments. They tend to be based on central government priorities rather than locally determined priorities, and historically they've all had different outcomes connected with them. They will have different constraints around them, different timescales for them, all of which has made it unnecessarily difficult for us at a local level to bring the money together to deliver priority programs that harness the opportunities that we have and tackle the challenges that we're facing. So government has listened to that over the last 12 to 24 months. And from this year, from the 2026-2027 financial year, there's a major change for some of the combined authorities, including ours. So the first is that we are now called a mayoral strategic authority. And we have got an integrated settlement instead of having all of these different funding streams from different government departments. Now, it doesn't encompass everything, but it has brought together lots and lots of the funding streams that we previously had. And because we are an established mayoral strategic authority that has demonstrated a track record of delivery with good governance, we have been able to receive our funding in this different way. It has given us greater funding levels. Just the raw funding is more than it has been previously, particularly for some of the investment areas. But secondly, it gives us much more flexibility to enable us to deliver more and better things. It doesn't give us all the flexibility that we want, but is a big step in the right direction. So I just wanted to say that by way of introduction, and now I'm going to hand over to Holly.
Thank you, Alan, and good morning, everyone. Pleased to be here. Firstly, just to say congratulations on your election in a public office and your appointment to this really important committee. My name is Holly Bainbridge. I'm the MSA's Head of Policy, Planning and Performance, and I will be presenting this item with my colleague Chrissy, who I think many of you have already met through your induction and SAF training. So we've got a paper in the bundle, but we've also prepared a few slides just to try and bring this item to life. So I'm going to ask my colleague Michael to do next slide, please. So very much as Alan said, as you know, the MSA has been formally established now for just over 2 years, and we are now formally recognised alongside 5 other MSAs and as an established MSA. And because of that, we are now receiving the integrated financial settlement. Next slide, please, Michael. Thank you. And I think just to start by saying everything we do as an organisation is informed by a really clear set of strategies and delivery plans. We've spent a lot of time working hard on this suite of documents, which ensures that we have a really clear evidence base about who we are as a North East, what our challenges and strengths are, and where we want to go. And that evidence base is what drives our decisions around funding and where we want to go. And we've worked really hard to get to this point. Lots of engagement with residents and partners, and I'm sure you've made yourself familiar with all of those key strategies. Next slide, please. So the integrated settlement and I know this is new for some members, but as Alan said, this essentially is a new funding model for established MSAs. So it combines multiple separate government funding streams into one single flexible funding pot. And that obviously gives us more flexibility and control over how that money is spent. And it also gives us more certainty because this settlement is over the medium term. So over 3 years for revenue and 4 for capital. And for us, it removes all of the previous individual bidding rounds that we would have had to go through for the individual funding streams and all of the complex separate reporting requirements. So it really helps streamline things for us, how we work as an organisation. But I think the best bit of the integrated settlement is that now accountability is much more focused on the delivery of outcomes, as Alan was saying. So the conversations that we'll be having with government going forward will be more about impact. What impact is this money having on the people of the North East, and what difference are we making? And I know that's what we all came into public office to talk about and to do. So much more focused on outcomes, which is great. And although it's one single pot, there is still a framework within that pot. So you can see on the slide there, there are 6 pillars within the integrated settlement that provides that framework. So as you can see, the biggest pillar by far is around transport and local infrastructure, around £1.3 billion, and the other 5 as listed there. So we have flexibilities within those pillars. So Michael, next slide please. So in terms of flexibilities, we can move money between programmes within the pillars. We can move funding between the pillars, so 10% of the annual value between, except for the one in purple, economic development and regeneration, where we can move the full amount if we choose. We can move funding to future years, providing that we can provide the assurance to government that we're still on track to hit those outcomes that we've agreed. And we can move up to 10% of capital funding within each pillar to revenue and 100% of revenue to capital. So we have quite a lot of flexibilities within that pot. And that really helps us be more strategic about how we use that funding. And we've had to formally set out in writing how we will manage and deploy those funding flexibilities. And essentially that's approving decisions through our existing frameworks. So through the SAF process, which I know you've had special training on to get to grips with what that is. And Chrissy will talk to you more about that in a few minutes. Next slide, please. So this is our integrated settlement outcomes framework. So this is essentially what we've agreed with government that we will achieve with this £1.8 billion. This is published online, so it's there for the public to view, and it's also attached in the bundle. And essentially this was getting to a compromise position with government between the MSA helping government deliver national objectives and outcomes, as well as us having that regional autonomy to reflect what we know the region needs and deliver our 5 missions for the North East. So unsurprisingly, you'll see targets in there around jobs, houses, enrolments and skills programmes, qualification achievements, more people using public transport, more people using active transport across the region. Unsurprisingly, there's some targets in there around construction skills, a specific area of focus given the national push on house building. So that is our outcomes framework. And when we sit aside government every 6 months at the programme boards, the first one is expected to be in December, this will be what the conversation will be mainly on. How are we doing against these targets, and are we on track to deliver those or not? Next slide, please. And last one from me. The main reports around the integrated settlement are as follows. So every 6 months, as I said, we will be sat in front of government and there is a specific template and guidance from government around what they expect to see within those programme boards, and we've stayed really close to the few MSAs who are a year ahead of us in this, so we've already been doing programme boards with government, so really understanding like how they've worked in practice and any learning we can take from those. As you know, every quarter we take through a budget monitoring report through the Cabinet, and appended to that also is a performance report of our strategic investment programmes, and those reports will include per integrated settlement pillar an update on the spend, the risk, the outcomes and the outputs. So again, really transparent reporting through Cabinet into the public domain. And then lastly, just to say, the Integrated Settlement Outcomes Framework is part of a wider performance management framework. So whilst the integrated settlement accounts for the largest proportion of our funding, it isn't the only funding that we have. So you'll know about the investment fund that we have. So we have a wider performance management framework which looks at all of the measures that are important to us related to our big missions. So every 6 months we take a report through Cabinet, reporting on all of those measures and letting members of the public know how the MSA is performing. Next slide, please, Michael.
Is that on? Yeah. Thank you, Derek. So I'm Chrissy Page. I'm our Head of Investment Programmes here. I think I've met a number of you before already, so nice to see you again. So I was just going to provide a bit of an update here on the kind of governance arrangements that have been put in place to support the MSA in terms of management of our integrated settlement, and to highlight some of the assurance activity that's been undertaken to date as well. So ahead of the introduction of integrated settlement, government actually commissioned a formal readiness assessment to test whether we had the kind of structure, capacity and governance arrangements to manage these new responsibilities. So PwC were appointed by MHDLG to undertake this work, and they were assessing the organisation across the 4 areas you can see on the left of the slide there. So this is strategy, planning and governance, people and capability, financial and performance management, and reporting and evaluation as well. So the final report was published in March 26, and this was a really positive assessment. It confirmed that we're well placed to manage and deliver the integrated settlement, and resulted in us kind of getting that first tranche of money coming in. So overall, we were assessed at sitting between building and embedded in terms of our level of maturity, with embedded representing that level that government kind of expects the organisations to achieve, or to have a really clear and credible pathway towards. And the assessment, was really clear that we're well positioned to reach that level. So the report recognised the strength of our strategic framework, which Holly's kind of covered there, our established governance arrangements, our generally robust approach to risk management, financial oversight and engagement with government as well. It also assessed several areas for continued development as well. In particular, I think, acknowledge that we're quite a new organisation. We've got new staff, and we needed to it was very important for us to work on embedding those newly recruited staff into their roles. And also around continuing to strengthen our data, digital and management information capabilities as well. So to support this journey within the report, PwC made 29 recommendations. This was very similar to kind of what the other MSAs across the country got as well, probably a few less than some. And these are focused on a relatively small number of known areas of improvement, including the completion and embedding of key frameworks, strengthening our workforce planning arrangements, formalising approaches to funding flexibilities, and further improving our data reporting and insight. So we're actively managing progress against these recommendations. We had 3 that we needed to complete before the 1st of April, and we met that target, and a further 2 have since been delivered as well. And the remaining kind of high priority actions remain on track, and they're expected to be completed ahead of the first board due to take place in December. So I guess it's really important to recognise that these actions are not designed to kind of address fundamental weaknesses, rather they're kind of, supporting us to build on an already strong foundation and support our progression towards being kind of fully embedded, and over time at that kind of leading level in terms of our maturity. Next slide, thanks, Michael. So turning specifically to governance, I think the committee can really take assurance that we've already got well-established governance arrangements in place for managing investment activity. And these arrangements are underpinned by our single assurance framework, our risk management framework, and our performance management framework. So together, these provide really clear arrangements for appraisal, decision-making, programme oversight, performance monitoring, assurance and risk management as well. And the same governance structures and controls that apply across our other investment programmes will also be applied to integrated settlement. And this will ensure that we've got consistency in how our investment decisions are made, how our programme performance is monitored, and how our risks are identified and managed as well. And I think alongside this, there's also an important role in terms of our governance committees, so Cabinet, Overview and Scrutiny, and Audit and Standards Committee as well. They will continue to provide political oversight, challenge and assurance within their respective remits. Members might also want to note that our arrangements will also be subject to an additional independent review. So we've got our internal audit team will be undertaking an advisory review during this financial year, and this is going to look at the design of the programme, the governance arrangements and scrutiny mechanisms as well. So this will provide further assurance, and we're planning for this to take place ahead of that first formal programme board with government as well in December. So finally, I guess we're intending to bring a further report back to this committee in early 2027. So this will include an update on the outcome of the first programme board and the kind of the feedback that we get from government. Also the findings of the internal audit review and any lessons that have been learnt from kind of this initial stage of implementation as well. So this should provide the committee with an opportunity to review how the arrangements are operating in practice, and also to kind of continue, in your kind of important assurance role as well, in making sure that we've got effective, stewardship arrangements in place for public funding. So that's all I'm planning to say today, but thank you, Chair, and I'm happy to take any questions.
All right, any questions on integrated settlements from any member? David?
Right. Thank you for the presentation, and it's really interesting and appropriate, I think, that we're moving towards this outcomes focus. I heard all sorts of really good words, like more people using public transport and active transport, etc. Could we perhaps just be reassured that there's going to be measurable metrics in place below these kind of good words that can actually be properly measured when it comes to judging progress against this outcomes focus framework?
I'll take this one, is that okay? Yeah, thank you for asking this question, because it gives us an opportunity to talk a little bit about the performance management framework, which has been something that I've worked on for the last 6 months of being here at the MSA, and I'm really pleased with where we've got to as an organisation. Any complex organisation, particularly an organisation that's spending a lot of public money, absolutely has to have a really robust performance management framework that works and gives us all a reality check of, are we actually making a difference, and that real clarity and line of sight and transparency. So we've worked really hard to get together a set of measures per mission. So, the MSA's got 5 missions, and be really clear around what are the outcomes and outputs that we want to track and report and have that transparency over. So we've got a really clear logic model now for each mission. Again, that's published online so everyone could view, and I'm very happy to come back to committee if you'd like to talk more about the performance management framework in detail. But we've taken a lot of time to see what national statistics are appropriate for us, what regional data, what MSA data do we have? So we've chosen the metrics. We are now putting in the right technology in place to ensure that we can get that data, that we have real confidence in the integrity of the data, and we can start reporting it on a regular basis. I think the next step is ensuring that we've got carving out the time and space to then properly look at that intelligence and ensure that is driving our decision making. And I'm really confident that we're in a great place as an organisation to do that.
David, can I just add, when you look at the internal audit plan for this year, we've got, the girls have already mentioned workforce planning. That's down as part of the internal audit plan. Preparedness review is part of the internal audit plan. Performance management, part of the internal audit plan. So we will be getting assurance from the internal audit guys that these things that the girls are talking about are fit for purpose.
Good, thank you.
Can you put your mic off, David? Andrew?
Thank you, Chair, and thank you for the presentation. And it's really exciting to hear about this development. It's fantastic stuff, and I'm very glad I'm an auditor and the standards now rather than in the challenges you had before in reporting. And it's a kind of follow-up question, although we obviously made slightly similar notes about KPIs for outcomes. You've got a number related to the integrated settlement outcomes, and I'd be interested to understand how that relates to your wider performance management framework KPIs, and also how these are going to be, I mean, I realise that they're publicly available through cabinet reports and the like, but to what extent, and I think there are some recommendations on this, are you kind of developing clear dashboards so that people can actually understand, not just understand the work and the mission of the MSA, but actually understand how they're performing, because it's been I won't say a weak point, but it's been an issue, I think, for mayoral authorities right across the country as to the transparency of actually how the figures stack up.
Okay, thanks. No, I mean, within the performance management framework, obviously, we're talking here about outcomes, but then there's layers of kind of monitoring and assurance as well that takes place below that in terms of our performance management. So from a kind of project level upwards, we're tightly managing that. And we produce, quite comprehensive, programme performance pack on a quarterly basis. That goes to both our Finance and Investment Board and our SLT as well, and that's in a dashboard format. So that shows, all of the key indicators you would expect around kind of spend and forecast spend. It's going to compare that against the baseline, that we're working against. And it will also look at that for kind of the KPIs related to those, at that kind of strategic programme level, as well as kind of wholly capturing that in some of the more corporate reports at a kind of mission level as well. And then it also includes, assessment of risks, key risks related to those programmes as well. And we RAG rate the programmes too against clearly defined criteria, so that we've got, really good, solid, robust oversight of where all of our different programmes are. Because I think we're very conscious that obviously at a pillar level, individual bits of underperformance, it might not necessarily show that, which is why, we are sort of monitoring this closely at all levels, down to project.
Can I just follow up with a supplementary on the back of that? So you've talked about expenditure and pillars, yeah? Will you be, and this is probably for Marks to be fair, will you be accounting for expenditure under each pillar, and will you be able to differentiate between expenditure through the integrated settlement versus expenditure through other means, such as business as usual?
Thank you, Chair. Yes, so from a reporting to government point of view, we absolutely have to account for things separately, because we've talked there about what the structure of the settlement is, and whilst there are flexibilities, as Holly described, those are set flexibilities, and we have to demonstrate and account for the funding in a way that shows that we've complied with them. So we've got a clear route to using the flexibilities, but we also need to be able to demonstrate that we haven't gone beyond that, for example. Because we've got a very specific set of outcomes associated with the integrated settlement itself, we also have to be able to demonstrate that that funding specifically is delivering those specific outcomes. We then have some other funding outside of integrated settlement, the main one being our 30-year investment fund. That's fully flexible funding, so it isn't tied to the integrated settlement outcomes. And therefore, again, against that, we monitor against the specific outcomes that we look to drive when we make investment decisions to use the investment fund. And again, you'll all be familiar with the single assurance framework that we use to evaluate business cases for the use of that funding.
Okay, thanks. Any other questions? Yep. Tom?
Tom Redmond, Bishop Auckland. Just looking at risks here, it looks like there's a risk there that the North East MSA, if it under-delivers against the outcomes, how early will we know if it's off track? What determines that?
We'll be able to see, because through our performance reporting, we will be reporting at a pillar level as well as kind of the strategic programme level. So we'll know sort of exactly where we are against where we should be. And then we've got, through our risk management framework as well, we've got clear kind of mitigating controls as well. So we'll be managing delivery of those controls to make sure that we're on a pathway to bring us back to green.
Yeah, and if you do miss it, does the government then take actions? That's what I'm reading here.
Yeah, the government, ultimately at the programme board, we have to demonstrate to government that we are on track for delivery. If we are off, we have to be able to demonstrate to government that we have that clear pathway to green, to give them the confidence. But ultimately, if we don't deliver the funding, then I guess, it is up to government if they want to take any action in response to that. But I think, we feel confident that we've got the right kind of structures in place to help us to have tight oversight of that going forward.
Thank you.
Tom, in my experience, if we fail to deliver, government will probably put the combined authority under special measures. That's what tends to happen, in my experience. But I'm confident we'll not get there. Right, can we finish that topic then and move on? Yep. So that was an information session about integrated settlement. Provide an update on where we are. I think we've covered it. It'll come up time and time again over the next 2 to 3 years, as there's so much money involved and it's so important. And we'll try and keep it alive as best we can. And we'll probably put it back on the agenda in January. And hopefully that'll refresh everybody on where we are, and no doubt you'll have some more interesting questions. Right, so moving on then. We're now going to do the draft statement of accounts. So this is a double header. Margs is going to talk about her report, and Eleanor's then going to finish off with an overview of the 25-26 accounts. And there'll be lots of numbers, and you'll have 1 or 2 questions, I'm sure. But firstly, over to Margs.
Thank you, Chair. So we are switching now from integrated settlement, which was a forward look of how we're funded in the future, or from here on in. We're now looking back to previous financial year, so the year ended March 2026. It's as you will have all seen when you opened your papers, an extremely long report, as financial statements are these days, unavoidably. I'm going to first, as Chair said, talk through the narrative report. If it's okay with members, I'll hand straight to Eleanor after that, because her presentation will, the two things are really intertwined, and her presentation will answer a lot of questions about the structure of the accounts and what each of the elements of it are there for. And then we'll take questions after the two, if that's okay. So the narrative report, this is the front section of the statement of accounts. The purpose of it is that it's intended to provide an accessible overview of the authority, including its financial performance, financial position, and the main issues affecting the performance for the year. It explains the key factors that have shaped the accounts, including the wider operating context in which the authority worked during 25-26, and hopefully helps readers understand how the figures in the statement of accounts connect back to the activities of the authority, its priorities and delivery responsibilities. It therefore includes both financial and non-financial information. It includes a summary of performance against the authority's strategic objectives, so members can see the broader delivery context alongside the financial information. It sets out a range of delivery outcomes achieved during the year, giving a sense of what has been progressed through the authority's investment programmes and activity. I don't propose today to read through that non-financial performance. It's there for you all to read, but it is just worth me drawing your attention to it as I think a good summary of what was delivered over the course of that financial year. Please do see it as complementary to the financial statements. Neither can replace the other. And Eleanor, as I said, will cover some of the detail of the statement of accounts themselves in the next presentation. So let me just talk about key messages from the report. The key financial message is that the authority remains in a strong financial position, with the revenue budget for corporate overheads and related income and expenditure closing with a surplus of £20.3 million. We had budgeted for a surplus of 1.4 million, so that final outturn significantly stronger than we had budgeted. By far the main driver of that additional surplus was Treasury management income, reflecting higher than budgeted interest rates combined with higher cash balances during the year. As we've previously set out in our medium-term financial plan, that should be treated, and we will treat it, as a one-off benefit rather than a sustainable source of funding for ongoing expenditure. To state the obvious, we will not always be able to rely on interest rates and high cash balances. So for that reason, what we will do is propose to Cabinet that that additional surplus be transferred to an earmarked reserve rather than being used to create or support ongoing spending commitments. So turning now to running costs and overall expenditure. Organisational expenditure has been controlled within the approved budgets, which is an important message, particularly for members of this committee on financial management. Overall expenditure was broadly below budget, reflecting a combination of controlled spending and the phasing of some activity during the year. There was also a lower call on contingency than originally planned, which contributed again to the overall position reported for the year. On delivery programmes themselves, the authority incurred approximately £520 million worth of revenue and capital expenditure during the year. That demonstrates the scale now of activity being managed by the organisation. Programme expenditure was below budget, but I should emphasise this is primarily a timing and delivery profile issue rather than a reduction in either our ambition or our overall funding. In particular, the variance mainly reflects the timing of delivery and claims across major programmes. As I said, not a loss of funding or any indication that the programme pipeline is not there. In terms of strategic risks, again, the paper covers those. The section on risks draws together the authority's most significant risks that include organisational capacity, delivery of the integrated settlement, future funding and powers, policy and partnership risks, and reputation. This section is particularly relevant to the committee's role, as the Chair referred to earlier. In our standard meetings here, we will typically do a deep dive into one of those strategic risks. It's relevant to this committee because it links directly to members' responsibilities for oversight of governance, risk management and internal control. I hope it provides a useful summary of the principal strategic risks facing the authority, as well as the actions being taken to mitigate them. So in terms of overall message, the narrative report gives a balanced summary of the authority's financial performance, key delivery activity and operating environment for the year just ended, and is intended to complement the detailed statement of accounts. On which note, I will pass to Eleanor to do a presentation on the statement of accounts, and then we'll take any questions that members have on the two. Thank you.
Thank you. So this item is to present the draft statement of accounts for 2025-26 financial year to the committee for information. The accounts remain unaudited at this point, and the purpose of today is to give the committee a bit of an overview and an explanation of what the accounts tell us, and an opportunity to ask any questions. Next slide, please. So in terms of the purpose, I'm going to cover sort of 4 things. First, as I said, to give members a clear overview of what the accounts are telling us about the North East MSA, to explain the core statements, hopefully in plain terms, so that members can see what each statement contributes to the overall assurance picture. Thirdly, a bit of a reminder to the committee of the respective roles and responsibilities in relation to the accounts. And finally, I'll take members through the remaining publication, inspection, audit and approval timetable to get us to final sign-off. Next slide, please. Before looking at the numbers, I think it's worth reminding ourselves about what each of the 4 core statements is designed to answer. So the movement and reserve statement explains how the reserves have changed during the year, distinguishes between usable and unusable reserves, and that helps members to understand what is actually available to support future activity. The comprehensive income and expenditure statement reports our income and expenditure on an accounting basis under international financial reporting standards. It's a measure of the economic cost of services, not simply the amount charged to the general fund. The balance sheet provides that year-end snapshot of assets, liabilities and reserves, and is the main statement for understanding our overall financial position as at the 31st of March 2026 year-end. The cash flow statement then shows the movement in actual cash flows. Taken together, the statements support the going concern assessment and compliance with the SIPFA Code of Practice, which we have to follow. So at a headline level, the draft accounts show that the MSA has a strong assets and reserves position. The income and expenditure statement reports a £24.1 million surplus on provision of services. That means that recognised income exceeded recognised expenditure for the year on the accounting basis used in the statements. Usable reserves at the year end were just over £501 million. A significant element of that is capital grants unapplied. So it shouldn't be read as one single unrestricted cash pot. A lot of this relates to expenditure which is committed for future years already, but just hasn't quite got out the door yet. Net assets and total reserves were £643 million. Cash and cash equivalents closed at £34.1 million, which is up £5.2 million over the year. The key caveat, I think, in reading the accounts is that this is the first full year of 1st of April to 31st of March that we've had. Last year's financial year was a shorter financial year because the authority was established on the 7th of May. So any prior year comparisons when you're looking at the full year's expenditure do need to be treated slightly carefully because this is our full sort of first 365-day period. Next slide, please. The comprehensive income and expenditure statement, this slide looks at that in a little bit more detail. The statement itself is in the agenda pack at page 53. I think the important point to note here is that the cost of services is, we have a net cost of services, but that's offset by grant income, financing investment income and other comprehensive income. So the result is a total comprehensive surplus of £24.9 million. As I said, the net cost of services is 98.9. That is more than offset by the non-specific grant income, which is primarily the transport levies, plus financing and investment income of £18.7 million net. This chart is kind of intended to show the scale of each line rather than imply that each amount is directly spendable. These are accounting statement lines, so they don't necessarily tell you exactly the same story as what Mags has presented to you when she's presented the kind of year-end budget position. The CIES is very much an accounting statement and we are heavily restricted in how we have to report for things. I think the overall pattern of income and expenditure is consistent with the organisation's delivery model, its funding arrangements, and is consistent with the prior year position. Next slide, please. Breaking down that expenditure a bit more in terms of the nature of that, there is a note to the accounts, which is note 2A, which breaks down income and expenditure by the type of expenditure. So we had total expenditure of £627 million in the year last year. Within that, we are quite restricted into the classifications we can present that under. So you'll see we've got an other service expenses line of 368 million, which doesn't tell you very much. So I've broken down a few significant values below that. It includes a lot of our significant kind of revenue programme spend, adult skills fund, skills boot camps, which was almost 90 million, our BSIP revenue expenditure on Mayor's Fairs Initiative, additional bus services, over £50 million, the transport delivery grants that we pay on a monthly basis to Nexus, Durham and Northumberland for delivery of public transport services in those areas, almost £87 million, our Tyne Tunnels contract, £37 million. So those are some of the key figures making up that 368 other service expenditure line. Other major elements within the expenditure, there's a line there which shows depreciation, impairment and what's called REFCUS. REFCUS is revenue expenditure funded by capital under statute. For us, this relates to where we are carrying out capital grant expenditure, which is on assets that are owned by third parties. So, for example, if we were funding one of the local authorities to deliver some transport infrastructure in their region, they own the assets, but we still treat it as capital expenditure. But that's got a specific classification called REFCUS. And there's a lot of that in our income and expenditure statement. We've then got also employee benefit expenses, interest payments as the other two kind of major expenditure types that are set out within there. Next slide, please, Michael. So I've done the same thing on this slide to break down the income figure. So we had total income recognised in the accounts of over £650 million, of which by far the largest category was government grants and contributions, which makes up about 72% of our recognised income in the year. We then had further income in terms of the transport levies, fees, charges and other service income, which primarily relates to tolls on the Tyne Tunnels, and then interest and investment income at £26 million. Next slide, please. So moving on to the next of the main statements, the movement in reserves, which is in the agenda at page 52. Usable reserves increased by £22.5 million during the year, ending at just over 500 million. The largest component of that is capital grants unapplied at £294 million. These balances are usable in accounting terms, but much of the value is linked to capital programmes and grant-funded activity, as I said, prior commitments that have already been made by the authority. The general fund balance, which is usable and kind of currently unring-fenced and earmarked, was £16.6 million, and we had further earmarked general fund reserves of £190 million. I think the main kind of point for members is that while there is significant funding there, the vast majority of it is already earmarked and already committed for future spending programmes. Next slide, please. The balance sheet, which is on page 54 of the agenda, shows the MSA's financial position. It's a bit of a snapshot as at the 31st of March 2026. Total assets were £940 million, made up of 368 long-term assets and 571 million of current assets. And then liabilities were 296 million, giving a net assets and reserves position of 643 million pounds. The current asset position includes 34 million pounds of cash and cash equivalents and 460 million pounds of short-term investments. The long-term assets position did reduce compared to the prior year. That reflects depreciation on our property, plant and equipment assets and repayment of some long-term debtors during the year. Our current liabilities also reduced, largely through lower year-end short-term creditors, and overall the balance sheet remains asset-backed. We're in a significant net assets position. The reserves position remains substantial. Next slide, please. The cash flow statement is the final of the core statements and is on the agenda at page 55. This seeks to split the cash flows of the authority between operating activities, investing activities and financing activities to explain the movement from a cash balance of £28.9 million last year to £34.1 million this year. It's consistent with the MSA's programme delivery model, so you can see that we've got material operating outflows, which are us funding our various service delivery programmes, offset by investing cash inflows. That is the receipt of the capital grants that we use to fund that. And then there are some movements around financing activities, which are slightly smaller. That mainly relates to repayment of some long-term borrowing during the year. And then our final net cash position was an increase of around £5 million. Next Next slide, please. So the group accounts, we also have to produce group statements, which consolidate the MSA's own financial statements with those of Nexus to show the total wider financial position. The reason why is because of the control exercised by the MSA over Nexus in terms of various factors around how it operates, setting kind of strategies, policies and appointments to its board, agreeing funding, etc. And that means that under the accounting standards, we have to consolidate them as if they're a subsidiary. So we remove any intra-group balances between the two organisations to show a group level picture of resources and obligations. Obviously, that's extremely significant. We had the single entity net assets position of 643. Added onto that, the Nexus share 926 million, so a group total of over £1.5 billion total net assets and reserves, so extremely significant values there. In terms of what the group statements tell us, again, there's the same set of core financial statements within the group accounts, a £50.6 million surplus on provision of services, a £44.8 million total comprehensive income surplus, a balance sheet position of £1.569 billion of net assets, driven largely by transport infrastructure, and a movement in reserves in terms of group usable reserves increasing by £20.8 million from £533 million to £554 million. Next slide, please. So this slide is just a bit of a reminder for committee members about the kind of roles and responsibilities in relation to the accounts. The committee's role today is to receive the draft and audit accounts for information, ask any questions, seek any assurance on governance, risk, control, significant financial messages. Management, including the Chief Finance Officer and her team, are responsible for preparing the accounts in line with the CIPFA Code of Practice, applying appropriate accounting policies and judgments, maintaining records, taking reasonable steps to prevent and detect fraud. Cabinet, the MSA itself, is responsible for proper administration of financial affairs, safeguarding its assets, securing value for money, and approving the accounts at the appropriate stage. External auditors provide independent audit opinion and report any matters arising. So the committee is a key part of this assurance framework, but you are not responsible for approving the accounts. That is a responsibility for Cabinet. And finally, the last slide just sets out the timetable. As I said, the draft accounts are for information today. They were published on the MSA's website on the 30th of June, and the public inspection period began on the 1st of July. That runs through till the 11th of August, and members of the public and local electors have rights in terms of examining the statements themselves, requesting further information. Obviously, members of the committee can look at those to your heart's content, submit any questions either today, or happy to take questions in writing if there's particularly detailed items. The external audit is planned to start in early September. The plan is then that the final audited accounts and the report of the external auditor will be brought back to this committee at the meeting in January, prior to the Cabinet approving the final accounts on the 26th of January 2027. That is just in time for the statutory backstop date for the 25-26 accounts of the 29th of January, so we need to have everything done by then. So today the committee is asked to note the draft accounts and the key financial messages set out, note the timetable for publication, inspection, audit and sign-off, and to raise any questions for us before the audit completion. Thank you very much. Happy to take any questions.
Right. Thanks very much, Eleanor. So there's a very quick rattle through there of the accounts, and I know that one or two of you are thinking, wow. So I'm going to bring it back to the public inspection period, which is open, and like yourselves, I've not been through the accounts in any detail quite yet. I will be going through the accounts in detail before the 11th of August, and I will be dropping a note to Eleanor before the 11th of August with some observations, which is exactly what I did last year. Is that right?
It certainly is, yeah.
So what I invite guys to do around the table, ask any relevant questions that you've got at the moment, but equally, it would be helpful if you took some time to actually look at the accounts and just to, even if the most, to you, there might be really important questions, to Eleanor, they might not be that important, But if you, to satisfy yourselves, have a read through the accounts, and if you've got anything that you want to ask a question about, take the opportunity to drop a note in, and we'll follow it up with an email address at the end, or maybe it's tomorrow, Eleanor, just so everybody's got the email address in which they can drop a note to. Right, now on that happy note, do we have any immediate questions for Eleanor? Mark.
Thanks, Chair. Firstly, can I just say it's nice to see one set of accounts at the end of the year and not two like we have previously, going when did that one finish, when did that one, and when did it start. So that's, for those who haven't been on the committee for, that's a huge benefit. My query is not specific to the accounts. It's something I'm trying to get my head around, and it's with regards to property depreciation time. So if we build something, is there a set depreciation time, or do we immediately write down to zero that? It's just I've seen it somewhere else where they immediately write it down to zero once it's been built, and I'm wondering if you can just clarify that for us and clear something up. Thanks.
So in terms of our property, plant and equipment, if we are building a new asset, then we would determine an appropriate useful economic life for that asset and depreciate over that period. There are sets of kind of SIPFA sort of recommended boundaries for lengths for different types of assets, but we would determine what was the most appropriate and then depreciate it over that period. So if it was an asset that was determined to have a particularly short useful economic life, then it could be being effectively written down quite quickly. But if it's something that's a longer term asset, then we would depreciate that on usually a straight line basis over that useful economic life. In terms of the MSA's assets, we don't tend to hold a great deal of property, plant and equipment, with the exception of the tank tunnels, which we've obviously had for some time and are extremely long-term assets. So while they are depreciated, it's over a lengthy useful economic life.
Okay then, well I've got a question, as you would expect. So reserves, we mentioned just over 500 million. And I think you mentioned that the reserves have increased by about 52 million. Is that right?
24.
Okay, I wrote the wrong number down, 24 million. How much of that relates to slippage from the previous year, where there's been slippage in programmes? And if there are slippage in programmes, what are we doing about it?
In terms of the reserves themselves, the majority of the movement actually this year, Mag's talked about the additional interest income on Treasury management that we've received this year, and that we were setting a considerable amount of that aside for future years. That actually makes up the majority of the kind of overall increase this year. We have had, additional grant funding which has been recognised, which hasn't yet been applied, sometimes because programmes are slightly behind the profile of what we expected them to be. But then we've also had, on the flip side, where we had that last year, we've then caught up on some of that delivery, so it slightly balances itself out. I think overall, delivery is still a big focus for the organisation, and there's a lot we need to do. I don't know whether Mags wants to say anything else about that.
No, that's spot on. I mean, only to say that the outturn report, which covers the performance of our delivery programmes, goes to Cabinet next week, and those papers have been published today. So equally, there's some information in the public domain as of today around delivery programmes, if members wish to look at that.
Just on the movement on reserves, you say 24 million is what you have. How do you actually acquire those reserves? Is it just for underspend? And when you do acquire them, do you invest them, or can you invest them, or are they just held for future projects?
So the majority of what's driving those is where we've received grant funding in advance from government, but we haven't yet used all of that grant funding to deliver payments to projects or to contracted bodies who are delivering services on our behalf. In terms of what we actually do with that money in kind of real cash terms, I think one of the points on the balance sheet, we've got £460 million of short-term investments at present. So we've got a treasury management strategy that sets out appropriate kind of low-risk counterparties who we will invest with, and we place short-term deposits with those organisations so that we've got a kind of a safe place to keep our funding. It's well spread across a variety of organisations, and it also gives us an investment income stream as well.
So it's kind of like a buffer, safety buffer.
So it's not a safety buffer as such. I think it's a feature of where we've received the funding in advance, and it's more of a timing difference in terms of if we received something from government, but actually those projects are only just beginning and are just getting into delivery. I think a facet of the age of the organisation, we're still quite young. A lot of the focus has been on getting things up and running. That delivery is now starting to ramp up, so we would expect to see those monies then going out the door on those projects.
Just on a final question, how long would you actually be allowed to hold onto those reserves?
There's no specific limitation in terms of the reserves and how long we're able to hold them, unless there's any specific conditions associated with any of the grants. Generally speaking, we have got quite a lot of flexibility by government around the delivery of these. Obviously, Holly and Chrissy talked a little bit about how that's going to work from an integrated settlement point of view moving forward. But, you know, government does like to see that we're delivering against what we said we're going to and report back to them. But it would be on a kind of a case-by-case basis.
Okay, thank you.
Tom, I'll just add, Treasury Management, so we have got a lot of investment. The committee were exercised a little bit last year about Treasury Management and about investments. And at the workshop, which have you heard us mention about workshops before, at the workshop in November, we spent an hour going through the investments and the Treasury Management. We had an independent guy in who gave us a really good green light on the investment strategy for the Combined Authority. So we have looked at it in the past. Ian.
Okay, thank you, Chair. Hello. This may be not within your area of expertise, but a question which is spotted on the accounts with reference to the Tyne tunnels. It has page 71. Northbound vehicle tunnel, 57 years. Southbound, 105 years. Pedestrian tunnel, also 57 years. Why the disparity between two who are essentially the same structure? I'm just slightly baffled by the half. Why one's double the other?
So it's linked to, I mean, as was explained to Councillor Swinburne about useful economic lives at the time of construction of the tunnels. So the tunnels themselves were constructed at quite different periods in time. So the pedestrian and cycle tunnels are the oldest. They opened prior to the first vehicle tunnel. And then there was the construction of the second tunnel much more recently. So it's kind of been based on those economic lives when the tunnels are being constructed. That's why there's the difference there, because of the age difference between the different structures.
Right, hadn't thought of that. So, admittedly, not in the immediate future, that there be something at some point that we have to replace the boards of the tunnels, or it could be not a small thing.
So there's a kind of a constant ongoing maintenance programme. There's been obviously some more significant maintenance works going on sort of a year to 18 months or so ago to make sure that the like underlying structure integrity is still there. There's obviously elements of the tunnels which need to be replaced on a more frequent basis, such as M&E systems and that kind of thing. But in terms of the overall structure, we'd depreciate that over quite a long life.
Okay, thank you.
Mark?
Thanks, Chair. On the subject of the tunnels, I think I raised the question previously that the one that's the oldest, I think we need to start planning now for its replacement, given how long it takes to get everything in place. Just picking up on what you said, Eleanor, about the short-term investment. And I'm aware that throughout local authorities, those who, and it's getting few and far between, do have some money in the bank, loan it to other authorities. So on your short-term investments, is that something that we do on a short-term basis? Because obviously we may need to dip into that. Do we loan it to like other authorities and things like that, bearing in mind the risk? And if we do we make a profit on what we loan out?
So we do loan to other local authorities. It's primarily local authorities within our LA7 region on a short-term basis. we would make an interest return on that if we lend to a local authority. What we try to do is look at the kind of comparable rates that you would get elsewhere in the market, and come to a sort of an agreed position between the local authority and ourselves about what an appropriate rate would be. But we would get an interest return if we loaned out money to one of our local authority partners.
Okay, I just wanted to check that if we put it in the bank and got an interest on that, we weren't losing out, or we were, getting the same, if not better, if we were loaning it out. So just confirming. Thank you.
Yeah, we do.
Right, okay. I'm going to finish that agenda item there. We've had some good questions. You've seen the numbers. The inspection period's open. All I'm going to do is encourage you to take a look at the accounts before the 11th of August, and we'll move on swiftly to the draft governance statement. And Adam, you're going to do this one, I understand.
Thank you, Chair. Yes. Hello, everybody. I'm Daniel Adam. I'm the MSA's Senior Risk Manager. I'll be talking you through today the annual governance statement, which supports the statement of accounts. The principles underpinning this, the same SIPA guidance that Eleanor talked about previously. And for those of you who are not familiar with an annual governance statement, it's a document that outlines what the MSA's governance arrangements are, improvements that have been made in the last year in relation to governance that we'll talk a little bit about today, and any areas of future improvement. You'll also see in the agenda a reference to a code of corporate governance. That is a separate document that I would think of as a static summary of our governance arrangements, whereas the annual governance statement is more of a living document outlining any changes we've made in the last year, any improvements we want to focus on going forward. Hopefully that's helpful. I think, as you heard earlier from Holly and the team, one of the key areas of focus for us in the last year has been the performance management framework. Obviously that document is now in place. Holly and her team have been onboarded. There's a lot of progress going on, as I won't repeat everything Holly had to say before. That was one of the key areas of focus that was highlighted in last year's document. We have made a lot of progress, but I think we'll see continued progress with things like the corporate performance pack being rolled out very shortly. Other areas where we've seen material enhancements would be things like the risk management program that you'll have heard us talk about before at this forum. We made some material enhancements to the risk management framework document that Chrissy alluded to earlier. That introduced new concepts like risk appetite, a formal taxonomy for risk management, which is in the process of being embedded throughout our governance processes. You've also seen myself and my colleagues talk before about the authority's strategic risks that Mags referenced earlier. We come to this forum every 6 months to talk those through, and in September we'll be coming back to this group to talk those through again, and you'll see some changes reflecting the committee's feedback from the last session. Other areas where we've made enhancements in the last year include filling a series of key vacancies. I see Holly's here as a head of performance and planning. We now have a head of technology and transformation, a leader in place for our data analysis and insight. Several legal folks have joined us, as well as enhancing our internal risk management capabilities. One of the things the chair mentioned previously was the challenge we'd faced last year was coracy at key committees like this one. I'm pleased to say today that isn't a challenge today, but that's obviously something we want to be mindful of going forward. So overall, we believe that we adequately comply with the principles outlined in the underlying document. But welcome any questions from the committee about the AGS.
Any questions for Daniel on the AGS? No questions? I didn't have any questions. I thought it was a pretty good document, to be fair. I think it's quite extensive, and I also think it's a pretty good reference document on how we do things around here. We had questions about it last year, and those questions have all been sorted, and I think it's a pretty good document, is my personal view. So no questions for Daniel? Brilliant. Then let's move on. We're going to move on to external audit papers now. And I say you're going to take us through these.
Thank you, Chair. Hello, everybody. I'm Nasser Al-Kabir. I'm the external auditor from Forbes Mazars. I'll take you through our audit strategy memorandum, which provides an overview of our audit scope and timing. I'll take the report as read, and today I draw out the key messages within our audit strategy memorandum for you this morning. If you turn to page 4, we note that this year's audit will be led by James Collins, who succeeds Gavin and brings extensive public sector experience. We still have continuity in the audit team, being myself as the audit manager and also key members of the team including Simba and our senior Michael. So we've got a strong level of continuity in the team this year. Page 5 of our audit report is our audit scope, approach and timeline. So our planning and risk assessment work commenced in April and that will be finalised in August. The fieldwork will commence in August with a view to complete by November, and this is subject to receipt of the pension fund information from the auditors of the Tyne and Weir Pension Fund. Page 7 highlights our group scope for the audit. So we are also the auditors of Nexus, being the material entity within the group, in addition to the authority. Page 8 of our audit strategy memorandum highlights our significant risks. So we have 3. Firstly, management override of controls. This is a mandatory significant risk on all audits due to the unpredictable way in which such override could occur. We then have revenue recognition. The risk of fraud in revenue recognition is presumed to be a significant risk on all audits due to the potential to inappropriately shift the timing and basis of revenue recognition, as well as the potential to record fictitious revenues or fail to record actual revenues. For the authority, we consider the risk to relate specifically to grant income. Grant income is recognised when all the conditions attached to the grant have been met, and sometimes there can be significant management judgment involved in determining whether such conditions exist and whether they've been satisfied. And the third SIG risk is around the pensions. So the net defined benefit liability or asset valuation. The financial statements contain material pension entries which are subject to complex interaction of actuarial assumptions, which include a number of estimates, and therefore we consider this to be a significant risk due to the level of estimates and the judgment involved in it. If we turn to page 10 of the report, now this documents our materiality. So the benchmark is gross revenue expenditure at surplus or deficit on provision of services, and that's been set at 2%. In the public sector, this benchmark is widely accepted benchmark because it reflects the scale of resources consumed in delivering services. The 2% threshold is consistent with what we applied last year, and it's also common public sector audit practice, and it reflects our professional judgments, and it does fall within the upper end of the range commonly applied in public sector audits where expenditure is used as the benchmark. The figures in the audit strategy memorandum, just for your information, are currently based on the 24-25 audit financial statement, and we will be updating that based on the draft figures for 25-26 now that we've received them. Page 11 documents our audit fees. The proposed fee reflects the scale fee determined by public sector audit appointments to which the authority is a party. Page 12 confirms our independence. We can confirm that as at the date of this report we're independent and comply with relevant ethical and independence requirements. Page 13, this relates to our value for money work, and it sets out the work we do in relation to VFM arrangements. Our work requires us to form a view as to whether the authority has made proper arrangements for securing economy, efficiency and effectiveness in its use of resources. The code requires us to structure our commentary to report under 3 specified areas. The first being financial sustainability, which is around how the authority plans and manages its resources to ensure that it can continue to deliver its services. Second section is around governance, so how the authority ensures that it makes informed decisions and properly manages its risks. And the third area is around improving economy, efficiency and effectiveness.
and that is essentially around how the authority uses information about its costs, performance to improve the way it manages and delivers its services. In terms of VFM at the planning stage, we have not identified any risk of weakness in arrangements. As part of our ongoing audit work, we continue to monitor our risk assessments that we perform. So if we do become aware of any changes, we'll highlight this as part of our audit completion process. Also in the back end, I've included a selection of appendices for your reference, which will provide a bit further detail on our audit scope, approach and communications covering the matters that I've discussed as part of the audit strategy memorandum. And that concludes my summary, but I am happy to take any questions.
Any questions? Tom?
Yeah, just one question. Did I hear you right to say that you didn't see any risks? There's no big risks facing us this year?
So, as part of our, when we do our audit strategy memorandums, we do an initial assessment. So, for the VFM work, we did an initial assessment, and at the planning stage, we haven't identified anything that would suggest that there was a weakness in arrangements. In terms of the wider audit, the significant risks are around the pensions, given the level of estimates and so on involved, management override of controls, and the revenue recognition risk. So those are risks. Those risks are audit risks. So from us, we think these are the riskier areas essentially. So we will do a bit more work around those areas as part of the audit. But at the moment, we haven't seen anything. And just going off last year's audit as well, it was a good audit. There wasn't any significant issues coming out of it.
So we should actually, the members here should keep oversight on what the pension is. The pension fund, is it?
Sorry?
The pension fund, is that what you're saying is the major risk?
So pension fund, income, because there's grant income, which can involve a level of judgment, and then management override of controls, essentially. Those are the three areas that we consider to be a significant risk at this moment in the audit.
Okay. Okay, thanks for that.
Okay.
David?
May I just further query actually the pension fund risk, because for an organisation which has only been in place less than 2 years and only spends, I think it was 16 million on salaries versus the overall expenditure of the authority, I'd just like to understand why the pension risk on that relatively small salary expenditure of staff who are probably some distance from retirement actually becomes such a major risk, or is this just a statutory thing?
So, with pensions, there's a significant level of estimates and judgments involved, and it feeds in from a wider pension fund, essentially. So, sometimes what it can mean that is that whilst it's a small pension pot, the judgments can swing the numbers to very material numbers, and as part of our audit work, we assess those judgments and the assumptions made to ensure that what is being disclosed in the accounts is materially accurate.
Eleanor, do you want to come in?
Yeah, it was just to add that while the MSA in its current form is quite new, we do have historic pension liabilities relating to former staff of kind of predecessor authorities as well.
Mm-hmm.
So there are some material figures within the accounts in relation to pension assets and liabilities there, which are probably more than you would expect given our kind of current expenditure. But we do have a lot of former pensioners, deferred pensioners, as well as our active members at the moment.
Right, okay, thank you.
Just picking something you said, Tom. I've been an audit committee chair for donkey's years, and management override of controls I have come across before. And especially when an organisation starts getting into financial trouble, it's something, if you guys are audit committee chairs at your local authorities and you think your local authorities in financial trouble, that is where you start to need to look, because management override of controls does happen. And it's not an infrequent thing. So it's something which we rely on, and I'm sure it'll get audited to death by these guys. After all, that's their job, isn't it? One other point which I did pick up in appendix B, was it? Yes. Appendix B. Eleanor. Appendix B. So this is about future changes, and this might be relevant. HM Treasury changes to non-investment asset valuation. Does a combined authority have any non-investment assets?
So we do have non-investment assets. We have property, plant and equipment assets. This change doesn't actually have a significant impact on the authority because our assets primarily relate to transport infrastructure. Under IFRS, transport infrastructure has to be held at historic cost. So we don't have any assets that are held at fair value, which is what this change relates to because it's relating to revaluation frequency. This has been a significant change which has had an impact on a number of the local authorities which do have quite significant assets held on those bases, but it's not been a significant change for us.
Thanks. So there's something for you guys to take away and to ask at your audit committees, Appendix B. And if you're not a member of the audit committee, I'm sure you could take the message back and give it to somebody who is a member of the audit committee. It's something that you need to be asking. Right, okay then. So no further questions on external audit, and we're happy to receive those papers, yeah? Which moves us swiftly on to the first of our internal audit papers. And Ian, are you doing this one?
Mark's going to take it.
Mark's going to do this one. Mark, over to you.
Thank you, Chair. Good morning, everyone. I'm Mark Oldham. I'm the Group Assurance Manager for the Internal Audit Service and reporting to Ian as the Chief Internal Auditor. So this report is a regular report that we bring to committee, and it provides committee with an update on our internal audit plan from 2025-26, and that is within paragraph 1.1, that table there, and it just provides a status about the progress on that activity. I'm pleased to say that all of the activity for 25-26 was complete, apart from a couple of final reports we just need management responses on, but they were issued recently, so there's no issues there. The report also provides committee with an update, and if you look at Appendix A, on some of the recent activity that has been concluded, and it just kind of gives a bit of a summary of those findings, along with the assurance opinion provided. I wouldn't propose to talk through the whole report, but happy to open up to committee for any questions on the report.
Any questions from anyone on Mark? Nope. Happy to receive the report and move on. Thanks. So we'll move on to the internal audit annual opinion. Ian?
Yeah. Thanks, Chair. So, as members have heard on several occasions this morning, like everybody else, internal audit is governed by a set of standards. In our case, it's global internal audit standards in the UK public sector, and that has a particular requirement on us, one which Mark has just satisfied in terms of reporting periodically to senior management and yourselves on internal audit activity and performance. And there is a secondary requirement for me to deliver an annual opinion which provides you with a conclusion on the overall adequacy and effectiveness of the framework of governance, risk management and control. That opinion is predominantly built upon the work that you've just seen in the internal update report, but is also supplemented by some of the wider governance things that we've touched on today. So, the report that Dan has just provided around the annual governance statement, we've touched on the risk management arrangements, some of the things that we've touched on around preparation for integrated settlement and such like. They're all other sources of assurance that I can kind of take and kind of supplement the work that the internal audit function does. Based upon all of the work that we have done, I'm pleased to say that we can provide reasonable assurance that those arrangements are adequately designed and operating across the authority. And this is a positive opinion, and it reflects a generally sound system of governance, risk management and control. I think in terms of where we are, it builds on the work that we did last year. I think we still reflect that the organisation is still relatively new. There are a lot of things that are kind of embedding, and we've touched on several occasions, we are putting new systems in place, we are changing, we are constantly revising how we do things. So a positive opinion. I guess the other bit to confirm is similar to NAS and external audit. There is a section in there on our independence, which kind of reaffirms our independence as an internal audit function. We don't have any operational responsibilities. We are genuinely independent of management. And we must also conform with kind of external audit, with the audit standards. And again, in terms of that, there's an assessment there that we generally conform with those standards. There is a massive kind of self-assessment behind that. There are a couple of areas where we don't conform with the standards. Part of that reflects the fact that the standards are brand new and came in at the kind of start of 25. So again, there's bits around embedding. There is a one that sits in there predominantly around a kind of a requirement to have an external assessment every 5 years. Obviously, from an authority's perspective, it hasn't been in existence every 5 years, but we need to do that for North Tyneside, which is the authority that we're kind of based in. And I think as we start to look at doing something like that this year, we'll have a conversation with Mags and the team and yourselves around how we maybe integrate and do something similar for yourselves. So again, happy to take any comments or questions on that opinion, Chair.
Thanks, Ian. Any questions? Yep, David. Oh, no, sorry, it's Andrew.
Thank you for that. Just had a question on one of you mentioned information governance. I think is something that you highlighted as having some weaknesses in or uncertainties. Just wondering whether you want to say anything about that as to what area it's sitting in or where the concerns are, or whether that is just part of that embedding of a culture, because it's something that if you don't get right at the beginning does kind of go wrong later on. So
at the last committee we'll have brought the outcome report for information governance. So it came directly from an audit of information governance that has been reported to committee previously. There are a number of recommendations. Those that are currently due for implementation have been actioned. But there are a number of kind of actions still in place. So, for example, Liz will be all over this. So, do you want to touch on it from an officer perspective, Liz?
Thank you, Ian. Yes, I will. I mean, I think it was going to be touched on in the next report, but yes, we've made good progress on the implementation of the recommendations that were in the report. We've established the Information Governance Security Board. Our second meeting is going to be this Friday. Dan and I will be there. Two of the other heads of service that we've talked about recruiting are also on that board. That's the Data and Insights head and the head of Technology and Transformation. The Information Governance Framework is on the agenda to be discussed at that meeting. We've improved our training monitoring. We have recruited an information governance lead. That interview was only last week, so I can't say much more on that, but hopefully that will all come. And by the next time I see you, I will have somebody with me who can talk to you about information governance. So we appreciate the question, but it is part of the growing the organisation, getting things embedded and making sure we've got everything in place. Thank you.
Thanks. Any other questions? Just one from me then. That was our first year and we had a reasonable insurance rating. What are we going to have to do to move that upwards to substantial?
Get better outcomes, I guess, is the opinion there. But I think the key bit is that the outcomes of the audits that we've got this year are very reflective of it being a relatively new organisation. So there are the things there is the training issue, and it was we've picked up a couple of bits around systems and embedding systems and such like. I'm confident that in terms of how management have responded and what we have seen so far of the organisation, that when we do our assurance level work next year, we won't pick up some of those kind of teething and niggly problems that we've got, if that makes sense. Again, as Dan has touched on when he was talking about the AGS, there are lots of key posts that have been filled as well, and that is allowing a lot of kind of programmes and things to progress, which may not have progressed as quickly as we would have liked in kind of the first year. So I think I will never give you a prediction because it'll be based on the evidence.
No, you can't. I get that. I know you can't give us a prediction.
However, I think I would be confident the management have got the right arrangements in place and the frameworks are in place to deliver an improved opinion next year.
So I regularly ask you, have you got enough information in order to form an opinion? Which I generally say to you in most meetings. Yeah. This is obviously the first meeting of the year, so I'm not going to say it today. But what I will make a comment on is when I was at Cabinet on June, I did say to the Cabinet that I was going to try and work with everybody to make sure that we did get substantial assurance. So what I will be asking you going forward is, have you got enough information to get to substantial assurance come the year end? So that'll be my ongoing question, but not for today.
fine. I guess in some points we'll touch on that slightly in the next paper.
Thanks, Ian. Right, okay, so that's that one. So let's do the next one, which is the internal audit charter update, 3-year internal audit plan.
Yeah.
Yep, Ian.
Thanks, Chair. I think just to start off with this one, we did bring this report to the previous committee back in March, but unfortunately it was in Corrit, so which is why we've had to bring it today. So it's just a kind of timing thing for to get that approval. I think in terms of the plan, the process for it, just for members that haven't had this before, the plan is driven by the strategic risks and consultation with management and audit committee around what the key priorities are. I think if you look at the plan that we've got for this year, it touches on a lot of the things that we've touched on today. There is time in there for things like treasury management. There is some work in there around preparing for that first outcomes framework, return to government. There's bits in there around performance management framework and such like. So the plan's been developed with those things in risk. Year one of the plan, as always, has a little bit more certainty. We kind of know what we want to get our teeth into in the current year. Year 2 and 3 are a little bit more around these are the things that are on our radar and we think may be happening in that time frame. But actually, those things will be kind of revisited again as we move through the year and we constantly keep the plan under review. I think in terms of Chair's question about that kind of level of work, I'm comfortable that we've got enough resources to deliver enough work to allow me to deliver my opinion. What that opinion is will obviously depend upon the outcomes of the work, but I think we are comfortable that we've got enough resources in place to do that, Chair. So that being said, the plan's there. It sets out the work that we propose to do over the next year. I'm happy to take any comments or questions from committee on that plan.
Any questions? Yep, Tom.
Just one. It's a 3-year plan. Can that plan be changed around quickly if new risks develop?
Yes. So effectively, this plan was almost drafted in March. There was an element of contingency within that. We have already done some work with management around utilising some of that contingency because there was a kind of an emerging risk that came and we needed to do some piece of work. So the plan is a plan. It will effectively flex. There is a little bit of contingency which allows us to do some things. If there was demands that took it outside of that, that would be a conversation that we would have with management around how do we resource that. And it would be a reassessment of risk. If something was so risky, it may be that we drop a piece of work that we've got planned. It may be that we agree that there's additional resources go to it. If it was particularly specialist in nature, if it was highly technical kind of IT type activity, it would be a conversation about getting the right kind of level of support in. So yeah, a plan is a plan and it will flex, and generally, you know, I can't remember the last time I wrote a plan that hasn't changed within a week of us writing it. Just the nature of the beast.
All right. Yeah. Okay, thanks for that.
Margs, do you think there's enough in this plan to put to get an assessment? Are you happy with it? Do you think the balance is right?
I am, thanks, Chair, and have worked with the team to both in terms of the balance between advisory and assurance and the nature of the work. I think that I would probably look for contingency hours to be in the current year, to be focused on assurance, to make sure that we as management and obviously audit committee has the right amount of assurance. I do think though that internal audit brings a good independent perspective of where risks are, and they're a good source of expertise that we as management do want to draw on in an advisory capacity as we're making changes. So I think it's right that we've got both. I think in particular, as other colleagues have referred to, we will do some transformation work this year, particularly around some of our data and IT systems. So I would look to make sure that where we've got access to that expertise, that we do bring it in. But I think the balance is good. I mean, as you've said, Councillor Redmond, particularly years 2 and 3 have to be a watching brief, both from the point of view of emerging risks, but also just where we're at in terms of our maturity of controls and processes. But certainly for next year, for the year we are currently in, I think that's the right balance. Thank you.
Right, thanks. 1 point from me. Ian did mention Treasury Management. That was something that we discussed as a committee, or the previous members who were on the table discussed back in November. We did ask for it to be put on the agenda for internal audit for this financial year. It's there, so the job has been done in that respect, and we look forward to getting that report. As a committee, we're asked to approve the plan for next year. Happy to approve it? Brilliant. So that moves us on to the Overview and Scrutiny Committee annual report. Michael, are you going to say something about this, or I'm just clearing that?
Excuse me, I can do very briefly. Just to remind members that the induction session we talked about the distinction in roles and responsibilities between Overview and Scrutiny Committee and Audit Committee, and the need for the two committees to collaborate and communicate to coordinate each other's work programmes. And this is part of that exercise, just presenting to you for your information the work of Overview and Scrutiny Committee last year, and it's an opportunity to identify any possible areas where there's an opportunity to collaborate.
Right, so the report went to Cabinet. They received it back in June. We're just asked to receive and note it, which I want to ask you to do. Just before I do that, though, on a regular basis, I have a session with the Overview and Scrutiny Committee chair. Now, previously, that chairman has moved on. It's doing a different job now. There'll be a new chairman. Michael's going to set a session up for him and I, or her and I don't know if it's a him or a her.
Him.
It's a him, is it? So, who?
John Cook.
So John, apparently John Cook, from wherever John Cook is he Durham? Durham. So I'll have a session with John Cook, and it'll be a regular session. Previously it was a monthly conversation, and we used to share bits and pieces of information. There was no appetite previously for the two committees to meet. So unless I get noise from you guys that you want to meet the Overview and Scrutiny Committee, then I will continue on that basis. If you think there's a need for the two committees to meet, if you could take us to one side, maybe after the September meeting, and then we can try and do something in November around that. But only if you guys think there's a need for the two committee members to meet. So when you go back into your local authorities, you'll speak to the Overview and Scrutiny Committee chairs or reps from your local authorities. Just have a little word with them. Do you think the two committees should get together maybe once a year? And we'll leave it up to you guys to come back to us. And on that happy note, I'm happy to receive the report. That moves us on to the work programme. Michael.
Yeah, again, so a work programme for this committee has been prepared in consultation with the core support officers and with the chair of the committee. That is based on the regular cycle of items that the committee has received in the past. And this is here today just for your information and adoption.
So if we take a look at it, you'll see that we've done everything that was down for July. We didn't do the deep dive into any of the risks. We did integrated settlement instead. And if you look at September, you'll see that it's pretty much heavily focused on risk. And that is the traditional cycle. So the next meeting, we will be doing lots of work on risk. Not so much on the financial stuff, but more on the risks. And then after that, then you move into January, and you'll see that January is very heavy on the financial stuff again, which tends to be the cycle. All right, happy to receive it? Brilliant. Right, sorry, David.
Just a quick point, Chair. May I ask if you've seen the email from my colleague, Councillor Stone, regarding the Mayor's bush franchising plans, where a discrepancy has arisen in the financial modelling, which I believe amounts to about £29 million. And I know this has been discussed at Cabinet, but the question is, with a view towards this, would you be willing and think it appropriate for this committee to receive a report on that matter?
So first and foremost, I want to ask John to respond on the Greg Stone thing. But secondly, one of the things which I have asked for is for, it's either bus franchising or bus reform. I don't know which one's the right terminology at the moment. But I have asked the guys to think about that for November, for the workshop in November. And my personal view is, I think it's going to be more appropriate to a workshop format than a proper committee meeting, because I think it might take a bit of time, and I think if it's in a workshop environment, we can have a more in-depth conversation, and certainly the workshop isn't minuted, and the workshop will not be recorded, so it could be a more useful conversation, I'm being honest. Right, the Greg Stone thing, John.
Chair, yeah, we've obviously received the email from Councillor Stone, which we're preparing a response to. But I mean, obviously, all the material about the bus reform consultation is in the public domain. So I'm not sure there's much more to add, other than we'll be sending a response to Councillor Stone on the questions he's raised.
Okay.
So can we just leave it at that for now? And if it's a relevant issue, then we'll stick it on the agenda for September and have a quick 10 minutes on it if it's relevant.
Okay.
Fair enough?
Thank you.
Right, okay. That concludes the agenda for today. Our next meeting, 15th of September, Gateshead. We look forward to seeing you all there. Thanks, everyone.